It is created a squeeze up into our 38.2% line of our all the way halfway back short for the week. Now, as we go into the 10 o'clock time frame, we have JOLTS job openings. It is a forward-looking jobs number print. And then we have preliminary University of Michigan consumer sentiment and inflation expectations. We're really focused in here on the Fed Watch Tool, and the FOMC statement is next week, Wednesday. The rate cut at the beginning of last week was being priced into June of this year. And at yesterday's lows, we were pricing in all the way to June of 2027. So the Fed Fund Futures rate cut got pushed out an entire year. An entire year. Right? An amazing move in Fed Fund Futures. It has since pulled back, or I should say, been pulled into the future up into December. But that, interestingly, is just correlating with price. And you'll notice that this is 40.8 and 40.6 and 40 even and 39.9. These are very tight spreads, very, very tight spreads. And so as we go into our day here, we're going to be paying attention to DXY, crude oil, the VIX and bank. And let's start off with DXY. The dollar has this little extension long level that it's defending. And what this extension represents is the previous highs of our last extension, two highs, going literally straight up in new extensions. And holding above these 99 918s and below the Euros 61.8% line here of the 1493 represents a dollar strength trade. And the dollar rallying away from those support levels and just continuing to make new highs of the week will drag the indices down into the continuation of their sell-off. If we were to break this extension or the Euro's extension short, that's where we would anticipate a larger squeeze into resistance versus being in a front run of a 38.2% line. That's number one. Two, bank is squeezing up into its resistance. In fact, this counter trend would be dangerous at this point now because we're going to gap up into potentially right into this short setup. And we're watching to see if bank declines from that resistance. The financials are in a series of short setups. And then as we go into our VIX chart, well, this is now the third full 50% retracement long from lows of the week to highs of the week. Every single time that we have run into a pullback from these Tuesday lows, what has happened to the indices? They have made lower highs. They have made lower highs. And so even though this is an incredible squeeze, it's inversely the largest pullback that we've had on the VIX. And then it creates the largest target as well too. Everything above these 2391s rounding down to 90 and then adding a tick. So the 2385s, the VIX is inside of longs. Again, we're going to use that dollar and bank and the VIX here to help us understand whether we are squeezing further into our resistance or declining straight down from our 38.2s. Right now, with the dollar and the euro holding their extensions, I think that you could make a case that there is a weakness event from these front runs versus squeezing up into larger resistance levels and even fill. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.